I'm Greg Hunter. Welcome to USAWatchdog.com. With us, a real treat. People have been asking for this man to come on for months. I've been trying for months. He's very busy, flies around the world. He gets calls from all over the world for his financial expertise. He's an economist. He is a former hedge fund manager. He is world renowned. He is a financial expert, bona fide. I'm talking about Martin Armstrong of Armstrong-Economics. Martin Armstrong, thanks for joining us today on USAWatchdog.com.
Oh, it's always a pleasure to be here.
Well, you said in the pre-interview, hopefully I can disclose this, you're getting calls from Washington every week, maybe a couple of times a week now. And I just saw that Donald Trump wants the dollar lower. What are you consulting people in Washington about lowering the dollar? Are you consulting people in Washington about gold, the stocks? What's going on?
No, I mean, I get calls all the time. I'm not consulting them that they should be lowering the dollar. No. Um, I'm telling them that they can't do anything about it. I mean, that's what's been going on for so long. I mean that's what the Plaza Accord was about. That's when the dollar went up in 1985 and the pound went to par. So what you have back then was the same thing. And the birth of the euro was all caused by this. These people in Washington think that they can help trade by simply lowering the value of the currency. And it's kind of like, cheating on an exam in school. I mean, you're not really addressing the issue. I believe we're going to end up with some major monetary reform going forward, effectively, because they've been playing this game with currencies for decades now, and they always lose.
What kind of reform do you envision happening? Do you think the dollar will lose its reserve currency status? Do you think something else will take its place?
Well, you have to understand that I've been warning about that for quite some time. That's why I get a lot of calls now. And there are people in Washington that are recognizing that the problem is the fact that the dollar is the reserve currency. So what does that really mean? It means that essentially that you have to be concerned about international policy objectives, and you're domestic. So you're not totally free just to do whatever you want domestically. If then you have the IMF and everybody else pleading, oh, please don't raise your interest rates, you'll affect us. So the Federal Reserve has also become almost really the central bank for the world. And that's way beyond its ideas or what it wants to do. And that's why you have Yellen coming out constantly choreographing and saying, listen, we're going to be raising rates. This is her domestic policy objectives, and she can't keep them hostage to international all the time. So it's a real mess. And I believe that we're out of all this chaos that we're going to see over the next few years, they're going to have to come up with some sort of a basket of currencies, and that will become the reserve.
Is that what, like Jim Rickard says, that the SDR will be the reserve currency? They're going to roll that out, the SDR, or nobody might not trust the SDR and trust a basket of currencies that will have a gold as some type of a backing for a world reserve currency. What do you say about that? SDR or gold or both?
No, neither. And I would be against both, actually, because the problem is that why did Bretton Woods fall? Okay, gold standard, etc. But you fixed the value of gold, but you didn't fix the quantity of money. And it's such a system cannot be sustained. The SDR. I mean, I was looking at that, and you can see on our site, I even initially proposed that back in 1985. And we went all through that. And honestly, then you're surrendering your sovereignty to a large degree to the IMF. And the IMF is just way too corrupt of an organization. So, I don't see that either. I mean, I think simply a basket of currencies is what I would argue for. And then everybody's individual currency simply floats against that. It's more or less a two-tier monetary system. I mean, many times this has been used throughout history. South Africa in the 1980s had the financial rand and then the rand. So if you wanted to domestic, you used the rand, and then if you wanted to transfer money in and out of the country, that would have to go through a second currency, which was the financial rand. So, you have to do this thing. I mean, I advised Switzerland that's what they needed to do. And, they basically went and pegged the Swiss franc to the euro. I met with them. I mean, probably, I think it was just a few months up to about a year before it broke. And I told them, I said, this is going to completely collapse. I mean, that's why FX Street named me, I don't know, forecaster of the year or something. But, I didn't think it was really quite warranted, because I simply said to them, I said, listen, it's going to break. They said to me, oh, no, we think we can do this. And I said, look, the odds are on my side. Not one country has ever succeeded in this. So I think, I'm just, playing the odds here. It's not going to work. And then after it cracks, then they call me on the phone. Oh, gee, could you please come back? I said, yeah, okay, fine.
So you think we might end up with an international trade dollar and a domestic dollar? That's what you think we may end up with?
Yes. You have to have something. All it's doing is replacing the dollar itself as the reserve currency, which would satisfy China and Russia. And it just simply would be maintained by an international board, and I strongly advise against the IMF. Way, way too corrupt. And I mean, I've written before. I mean, I went to the Republic Bank and rented the entire National Gallery in Washington to put on an IMF dinner for them. I was invited down to show me how they had the IMF in their back pocket. And they were trying to get me to invest in Russia with them. And I said, listen, my model says Russia's going to collapse. I mean, they all blamed me afterwards. I mean, they said, oh, we got the IMF. I said, fine, that's very nice. But I talk to the countries that have to support the IMF. So it's just too corrupt of an organization. And you can't replace that with just simply removing the head and sticking somebody else in, because corruption it's like a cancer. It goes all the way down. So, I mean, Trump's finding that out in Washington. You can appoint these people to be heads of various different agencies or whatever, but the bureaucracy underneath, which doesn't change, they don't have to listen. I mean, you got a lot of these conspiracy people who are, saying that, oh, gee, just because like Bush was the head of the CIA, he knows everything. Do you really think that a president can put somebody in who's just going to be a political appointee, he might be there for 2 years, that they walk in the office and say, oh, yes, let me confess, we killed this guy, that guy, and everything in the world? No, it doesn't happen that way. They say, gee, would you like a golf meeting? I mean, I'll get your clubs all polished up for you. That's what they want. They want to get him out of the office.
So let's go back to the dollar here really quick. Would gold be a good thing to have? You have been positive on gold in the past, and you've been not so positive on gold in the past. I know you've gotten a lot of grief on both sides of the aisle on this. So if we do have a domestic dollar and a trade dollar, I don't know if that's what you would call it, but let's just for our terms call it that. Would gold be a good thing to have for people in America?
Well, gold is a hedge against government, all right, but the problem is you cannot fix a currency. What is really wealth? The wealth of any country is exactly what Adam Smith said. But, I'll just articulate it a little bit different. It is basically the total productive capacity of a country. It's all its people. And that's why you can go to other countries. They have, a greater population, but are they educated? Are they innovative? I mean, this is what communism basically was attacking. It was attacking humanity. And I've been to both, Russia and to China. They were both communistic states, but different. Stalin was paranoid. All right. He basically was executing people if he thought they were smart enough and might pose a threat. He worried about what you thought. China had what you call the tall poppy syndrome over there. And that was, the poppy that grows taller than everything else gets its head cut off. As long as you basically just kept your mouth shut publicly, they didn't care. All right. So the difference is when China went into capitalism and Russia, you got completely different effects. Russia was like they had really drained every drop of humanity out of people. I had a friend who bought and set up a factory in East Germany, and he says, "Oh, the Germans are going to work really as hard." After I said, "I'm telling you, it's not going to work." And afterwards, within 2 years, he said to me, "No, you're right." It takes 3 East Germans to do the work of 1 West German. I said, you can't get over these things that what Stalin and that variety of communism did. Whereas in China, they didn't attack humanity. So as soon as they were free, man, they just, exploded. And I've said before, I was invited with the 97 currency crisis. I was one of the first people invited from the West to Beijing. So I went there. They gave me, worked with the central bank. And then they took me to a facility and they gave me a tour. And I was really amazed. But they were monitoring absolutely everything in the country. There were 249 varieties of tea, which were mind-boggling to me. I didn't know there were that many. And they were monitoring the prices of everything. So I had to sit in meetings, and they were asking me, why is this one tea different in price here versus there? And I said, okay, fine. Where is it manufactured? And they said, over here. I said, well, first of all, you're gonna have transportation costs. Secondly, humans always want something has a little bit more value to it if it comes imported from someplace else. So you go to Sydney and they say, New Orleans Steakhouse. You go to New Orleans, they say New York Steakhouse. Okay, so somehow it's always better if it's from someplace else. And I was impressed that they were monitoring everything, but they were not interfering. Whereas in Russia, what happened? Russia went from communism basically just to an oligarchy. The guys that were really there just took the industry, and that was it. You never really had a full, really capitalistic type system over there. It just went from, complete suppression to an oligarchy, and it very, very interesting. But you have completely different results.
And what about the results over here? And I want to just get back to this gold question because a lot of people want to hear your opinion on gold. Would you be an owner of gold with what's going on with the dollar and then wanting to devalue it or break it up into 2 separate currencies? Would you be an owner of gold? Would you advise people to have gold or silver in their portfolio? I don't mean bet the farm; you just have some.
Yes, I mean that's at that point you're talking about a hedge against government. All right, when you go through these monetary crises, effectively all tangible assets rise, not just gold and silver. I mean, if you look at Germany and the hyperinflation, the currency they replaced it with was backed by real estate. So yeah, that's basically it. It's just that whatever it used to be, and you can even look at this in Europe when they converted from their local currencies to the euro. So a cup of coffee that used to be like 10 krona or something suddenly becomes like 10 euros in a lot of places. So they translate various values, whatever it was under that currency, to whatever the new one is. So they always make that transition. And everything has an international real value to it, which is why you see foreign capital coming in and buying up real estate locally, things of this nature. Because everybody judges things according to their own currency. Currency is it's a mental state. It's a way we value things. All right. Even gold. All right. You say, gee, okay, fine. What's gold going to go to? If I say 1,000 or if I say 10,000, whatever. What am I doing? I'm translating it into the dollar. That dollar is your way of measuring value. It's not gold, it's the dollar. So in every country, if it's British pounds, you can say, okay, fine. They're going to look at it in their local currency. A European's going to look at what is gold in euro. You can have I think the biggest problem with a lot of the people in gold, they only look at it in dollars. And they say, gee, why isn't everybody buying this or whatever? And then you chart it in their currency and you'll see it's going down. So it all depends. I mean, we live in a very fluid, environment. So gold, as far as backing a currency is concerned, that's not the issue. It's been tried so many times and it has always failed. Why? What's the common denominator? It's politicians. All right. Marx failed there. Why? He said, we'll take all the ownership away from private people and hand it to the government. Okay. Why did communism fail? Because it's humanity. Once you put those same people in charge, they became greedy, the same as if it was a CEO. All right. That's human nature. So you're not going to flush that down the toilet, so to speak.
But private individual holders of gold would be a good hedge against whatever they do to the currency. You'll have a hedge to transfer to new value, whatever it's priced in. Would you agree on that?
Basically, gold is a movable asset. So there's two primary categories: movable and non-movable. And the non-movable is like real estate. All right. If there is no situation of a war or things of this nature, then real estate can hold on. But if you have all your money in real estate in Germany and there's World War II coming, you got nothing. You got to walk away from it. So one is movable, one's not. And so all the various different things, rose, stamps, coins, during the 1960s and 70s, all the rare stamps and coins from Europe were here in America. Why? Because when World War II happened, they just picked up everything and brought it over here. That was movable. So for years, then it kept moving back slowly towards Europe. Now you see, you take like ancient coins, for example. The two biggest buyers in ancient coins today are Chinese and Russians. So it's tangible assets have a value to everybody globally. The downside is on the real estate. I would never put 100% of my money in real estate because it's not movable. All right, you don't know what's going to happen, whatever. And I just published an article on the blog about what's going on in New Brunswick in Canada. The government, all these governments are broke. And the difference between a municipal government and federal is that the municipal governments and state governments cannot create money. The feds can. The feds can just go ahead and print money to cover their expenditures. Locally, they cannot. So what do? They just keep raising taxes crazy. I've also put on the blog and showing that the two states that everybody's migrating to are basically Texas and Florida. I moved myself. And honestly, my lawyer told me that in New Jersey, he said, listen, if you die, have your kids drag your body across the river before anybody knows about it because of the inheritance taxes up there. And my lawyer and my accountant made me sign in blood that I'd be out of New Jersey before the end of the year. So Um, I mean, even my sister's advisor is like telling her, you cannot retire here.
Uh,
So it's just getting, states, California is really bad. I mean, property taxes, I published an article on that. New Jersey now has the highest property tax in the country. The average home is paying $8,700 compared to, I think it was Georgia or Alabama was $776. So you have to be careful about the states, and what they're doing is they're going broke. So like up in Canada, they just came up with a program. I just published that woman in a very small home. They just suddenly cleaned out her bank account. They arbitrarily said that she did 700 or $76,000 worth of improvements on a house that was like about 1,000 square feet. She didn't do anything. They just arbitrarily said you did, and they just went across people's anything that they, maybe the last time they looked at a house, maybe 30 years ago. Oh, this is different, so they raised all the taxes. And I mean, this is, and what I wrote about. I mean, this is how Rome fell. Rome was the biggest city in ancient times, first one to reach a million population in around 180 AD. It fell to 15,000. Why? Because politicians kept raising taxes, property taxes. It got to the point you couldn't pay, you just had to walk away.
and you think that the USA, at least parts of the USA, are turning into Rome?
Oh, yeah. I mean, it's this what I just said, that the state and local governments, they cannot basically print money. All they can do is raise taxes. So the higher you raise the tax, not only you're seeing a very strong migration out of the highest tax states, but you basically you lower the GDP. I mean, this is why we're looking at economic growth. Like, if it's 2%, everybody's jumping for joy. It's not going to come back. I mean, we're not going to see this great economic growth. And you take, Trump on all this money, that's overseas that he would like to see home. All right, he's absolutely correct. eBay wanted to buy a company and take over a company, but when they looked at the taxes that they had to pay to bring cash back from overseas, the takeover fell apart. So, it's very nice. The Democrats say, oh, we're going to tax the rich, or we're going to make them pay, 40%. All right, well, they can just keep their money overseas. Trump's correct in saying, okay, fine, if I give you a one-shot deal, 10%, you bring it all home. I would basically sell short any company that didn't, because you don't know if you're going to get that opportunity again. You just take it, while it's there. But we have so much money that is just not being used in the economy. You take, all right, all the gold guys that were saying, about the quantitative easing and how it was going to be, hyperinflation, all this. They don't know what they're talking about. Just look at it. I've written about it many times. The bank said, oh, gee, you're buying back our bonds. Okay, well, we need a place to put money. Okay, so the Fed created excess reserves. Honestly, a 2-year-old can figure this is not going to work. All right, how are you going to put money into the system, and then the banks are complaining they have no place to put money because they're not going to lend? Oh, okay, fine. We'll create an excess reserves. You can put it right back with us. There's almost $3 trillion in excess reserves doing nothing.
And
Never went into the economy. Never stimulated anything. And what have the banks gotten out of it is, you look at the spreads between what they pay you for a deposit and what they charge. It's outrageous. I mean, if you're lucky, you get 0.2% for a CD, and then you want a car loan, and it'll be like 3 to 4%. That's a huge spread.
And do you think that the economy or the stock market is going to crash? The bond market, any of those things? I mean, right now, long rates on the 10-year are going down. The fear trade, people are running into the 10-year Treasury. Do you think there's any kind of a risk of a crash in the stock market or a crash in the bond market? What are your views on that?
Bond market, yes. I mean, all these things occur as contagions. Um,
Why the bond market? Why would you think it would crash?
Largely because what happens is that even in the Great Depression, not every municipal government defaulted. Many of them did, like the city of Detroit defaulted. They eventually made good. They defaulted in 1937, and yes, they finally paid off their bonds in 1963. So if you're counting on that for retirement, good luck. Um, but what happens is that once you begin to see one municipal government start to go down, traders act in response. Who's next? Greece, when Greece started going down in 2010, what did they do? They started looking around. Oh, they're all really in the same position. Oh, who's next? Oh, Portugal. Then they went after them. Then it's Spain. Then it was Italy. All right. Then they were looking at France. This is how they move. Okay. It's a contagion. So once you draw blood on one market, you look around. Okay, where can I do the same trade elsewhere? So the problem with bonds is that the U.S. is not going to default. But as you start defaults elsewhere outside the country, it makes people begin to get concerned about sovereign debt. Because sovereign debt is the worst of all. It's not secured. So if U.S. government went bust on its debt, what would happen? I mean, you can't go down to the National Gallery and start lifting Picassos, So whereas if IBM went down or General Motors or whatever, it goes into bankruptcy and you get, they sell off assets and you get something back. You get nothing back from government debt. So it's, and governments are always, very, very dodgy. I mean, because they make the laws, they do their own prosecution, and nobody can prosecute them. Italy, when it was in trouble, what did it do? You bought 90-day paper, and then suddenly they couldn't pay. So what did they do? They converted the paper to 10 years. Arbitrarily, that's it. Oh, okay, that 90-day bond you bought, no, you're not getting the money back. We're not defaulting, we're just converting it to a 10-year bond.
And do you think that the U.S. would? I have this theory about Donald Trump, and if push comes to shove, he's not going to do the full faith and credit of the U.S. Treasury bonds. He's going to do some sort of a default. That's what I think, because based on his past record, what he did with the banks in the '90s. Do you think that Donald Trump, if push comes to shove, that he will push the default button? He will just default on the national debt.
No, it's
Okay.
much different. I posted an article on that too. I went through it and I analyzed. I mean, the bulk of the debt is really held by the government, and it's in pension funds, Social Security, etc. So you're looking at, if you default, you're not defaulting on some third party over in Bangladesh. You're basically causing a tremendous problem in the social level domestically. But this goes back to the problem of the dollar being the reserve currency. All right, about a third of the debt is held by central banks as their reserves. So if the dollar is no longer the reserve currency, then they no longer need to hold U.S. dollar government bonds. So these are some of the changes that are coming.
Well, that would be like Armageddon. If they had to sell their portfolio of bonds, wouldn't that be a bond crash, Mr. Armstrong?
Yeah, but honestly, the U.S. is the strongest economy in the world. We're the ones holding everything up. That's it. U.S. is not the problem, and by any long shot. And people are going, oh, $20 trillion debt. Okay, fine, but world debt is at 150 trillion. So you're looking at something substantially different. And the real risk is more coming from Europe and from Asia. I mean, that's really the real risk. You take the euro. What? All right. I was involved. They came to me when they were creating the euro. Back then too. I warned them this is going to crash. You can't do it this way. And I told them they had to consolidate all the debts. Then that would have created a federal debt. All right. The whole idea of the euro came out of the Plaza Accord. That was Jim Baker telling them, please, you should all join together and create like the euro to compete with the dollar, so the dollar is not the reserve currency. They went off to create the euro, but they never consolidated the debt. And I warned them, there's no way the euro can possibly compete with the dollar. How's a big institution going to go in there and say, okay, fine, yeah, I want to buy some euro bonds? They go, oh, okay, fine, I can't buy euro bonds. I got to look at each country individually. So you see the 10-year bonds in Germany went negative versus other members because they were playing against the other, looking to see that the euro is going to crack. It wasn't strong for the euro. It was the fact they're basically the theory over there is if they buy the bonds and it breaks, they end up with Deutschmarks again.
So if there's a global meltdown, it's going to come from Europe or China, not the USA.
Yeah, you don't ever collapse from the core economy. It's always the peripheral coming in. All right. Same thing in the Great Depression. It wasn't the fact that the U.S. defaulted. The problem was that the first bank that went down was in Austria, and it happened to be owned in part by the Rothschilds. And then when they heard, oh my God, the Rothschilds bank is going bust, it just set off people selling all other banks. Then all the countries defaulted, except for France, and Britain went into a moratorium. They came out of it. But in 1931, I mean, you can go on eBay and buy a lot of bonds. China, all these different countries, you can buy them. They look very pretty. We used to, frame them up in our offices to remind us what happens to sovereign debt. They all defaulted. It just went off the boards, period. You got zero. All right, so that pushed the dollar up so high. That's why Roosevelt had to basically confiscate gold. He then devalued the dollar because the dollar was so high. He was creating basically deflation here. And his brain trust, he went against. They were doing the same thing as Germany. Oh, austerity, we have to maintain confidence in our bond markets, et cetera, et cetera. And they lowered interest rates from 6%, down to 1%. Nothing happened. The stock market still fell by, 90%. But, these are things that you have to understand. The dollar went up so high that forced basically Roosevelt's hand, and then he confiscated gold and devalued the dollar. But that was the whole reason, was the dollar was pushed up. We saw the dollar pushed up again in 1985. That sparked the Plaza Accord. So even these people that keep saying, oh, the dollar is going to crash, etc. If the dollar crashes, the world's happier and basically celebrating. You have half the U.S. debt has been equivalent in emerging market debt issued in dollars. The dollar goes up, they're in trouble. Then you're going to see more sovereign defaults.
And you don't think the dollar will crash? You think it's strong?
There's no place to go but the dollar at this point. Look at it. A lot of people, Americans, don't understand Europe. Why did I warn them that it was going to fail? Can you imagine if the U.S. system was that banks used the bonds of all 50 states as their reserve, and then let's say Mississippi defaults? What's going to happen? They're going to go, oh, well, which bank has most of Mississippi debts? it that's what you have in Europe. It became politically correct. You had to have a piece of everybody's debt. So then Greece goes down. Oh, okay, fine. We're going to have to give that a haircut. And you're chopping off the reserves of banks. That's why the European banking system, basically, with a good wind, it's going to fall over.
Ah, got it. Okay, and then let's get. I'm going to close with this. Three really big hotspots in the world. One of them's cooled down a bit in the Ukraine. Then we have a much hotter spot in Syria, and also crazy time with an armada of being sent to North Korea. What does your war picture look like? I know you do all these cycles and your economic confidence models. What does your war cycle look like right now with those three places, or whatever else you'd like to add?
Well, Syria, as you know, I wrote back in 2015. The real issue with Syria was basically a pipeline. Obama was just trying to BS everybody, and the press is so corrupt in this country that whatever, they're really pretty much in the pocket of the Democrats. So whatever propaganda they want to be put out is what they put out in the headlines all the time. And you'll see that a bit more as they flip the press now. Obama wants to go in. Oh, it's because it wants to save people, and they're using chemical weapons, etc. Trump wants to go in. Oh, it's really to support a pipeline. The same issues, the same facts are always there. But to me, I mean, Russia and Ukraine. I mean, our model was pretty good there. Pick that as the beginning point. But you have to understand what makes war even take place. It does not unfold when everybody's fat and happy. Simple as that. You turn the economy down, and that's when you get war. It's the way politics works. It's why. I mean, look, I used to work down on Capitol Hill. I tried to revise Social Security, and I was even working there on the tax reforms back in the 90s. You might remember Dick Armey was leading the charge on the flat tax, and Bill Archer was chairman of the House Ways and Means Committee. He was pushing for the retail sales tax, and I was liaison back and forth between the two, and they wouldn't even sit down to dinner publicly because they wouldn't be seen that they would be compromising. So I'm the one going back and forth between the two. And I was in Dick Armey's office. He puts his his feet up with his cowboy boots and puffing back on a cigarette there. And he says to me, Marty, look, I could never support the retail sales tax. And he says, because you're not going to get a constitutional amendment to abolish the income tax. He says, then when the Democrats get back in, he says, cycles. And he said, what's going to happen? We'll have both. And I looked at Dick and I said, you're absolutely right. And I said, this is just one giant waste of time. And it was Social Security. They were asking me to design a system to turn it into a national wealth fund. Same thing. Couldn't get it done. Why? Went through, said, this is how we allocate money. We take the track records. Everybody puts in a track record. We allocate it to the best one. This is how you got to look at it, volatility, etc. And Democrats wouldn't vote for it. They said, oh, no. When we get back in, we basically want to be able to change the fund managers. And I said, listen, this isn't about, putting your brother-in-law in here. And I don't care what somebody voted for. It's what's his track record? I don't ask, how did you vote? Did you vote Democrat or Republican? It's what have you produced? All right. So that's why I just walked away. It's impossible to get any reform done. And
is that why the economy is going down? Is that why the economy is going down?
Yeah, I mean, it's just, look, I wish Trump, all the best. And he has said a lot of things, and a lot of it hits the nail right on the head. How are you going to get it through? He basically said, he wants to see term limits. I absolutely agree. That's the biggest problem. All right. Who's going to vote for it? the best you could possibly do is get them to vote for it, that it will apply in 10 years. So it doesn't apply to them, but it will apply to the next guy when I'm out. That's the best you're going to get. All right. Somebody like, any of them really, Graham or McCain, they're not going to vote, oh, yeah, okay, fine, one term and I'm out. They're just not going to do it. So, a politician, this is what I've learned 40 years working with them. And not just U.S., I've worked with governments from China all over the world. And you can walk in and tell them, look, if you do this, it's all going to crash. It's going to fall apart. All right. And they'll go, yeah, but maybe you're wrong. And maybe, I got a little bit more time. No politician will ever do anything to prevent a crisis. This is what I've learned. Why? Because if I were to run for president and I said, okay, fine, vote for me because I saved your job, the first thing you're going to say was, how did I know I was going to lose it? Maybe I wouldn't have lost it. Maybe you're just lying. Okay? It's better you lose your job, then I come and say, vote for me, I'll get the guy that did it. And you'll cheer, yeah, go get him. Nobody will ever do anything to prevent a crisis. This is what I've learned. And I've dealt with governments from, all over the world. And it's the same reaction.
Is the crisis you're talking about war? Is the crisis of war coming?
War comes out of a debt crisis. It's when you lose your job, you're going to say, okay, fine, you're going to get angry. And that's what creates the civil unrest. So this particular cycle is rising in both civil unrest because it's economic and also international. But then they become contagions. All right, you had the American Revolution, that sets off a revolution, and French go, that's a good idea. All right, then the Irish say, hey, that's a good idea. It begins to spread. All right, the same thing with World War I. There is a huge contagion. Most people are not even taught in school. 1848, you can probably Google it and find out. It was 1848 was the year of the revolutions. Almost 50 countries were involved. One of them said, hey, that's a good idea. It started in Italy. You go, yeah, we should do the same thing. And it just spreads like a contagion, like any type of thing. We saw the '07 crash, okay? It was the mortgages, okay, over here. It didn't stop here. It affected the entire world. You take 1720, the famous South Sea bubble. Well, in France, there was the Mississippi bubble. Same year, it spreads from one place to the next. It's always a contagion. So war is unfortunately that way. And I would put the more dangerous one is certainly North Korea, because that guy has no experience. He's pretty much kind of a really loose cannon. And that you have to really be more concerned about.
Your odds-on favorite for the next war is going to be North Korea.
Well, I think the first part you're going to see really is more of civil unrest continuing to rise, and it's going to have pockets, definitely. But World War, as it was World War I or World War II, I don't think is possible anymore. You can hop in a jet and you can be from Frankfurt to Paris in like 15 minutes. So it's a lot different today than it was a long time before. But that doesn't mean there won't be conventional problems. We do have our problem with people in military, and there was a famous general who basically influenced Montesquieu, etc., and he was Savoy. And he was one of the famous generals in Europe, and he concluded and this is why we have the Second Amendment, the right to bear arms. He concluded that the danger of war was the fact that kings had all these armies. They're paying them all the time, and it was just like money going down the drain. Gee, I don't get to use it. You know, they started wars simply because they had a standing army to keep occupied. And that was his conclusion. So the idea of the Second Amendment is effectively that we would have a militia. You had the right to bear arms, okay, fine, and we needed to defend the country, then everybody came together. All right, you didn't have these massive standing armies, and that was the whole theory behind the whole Second Amendment issue. So we have people in the Pentagon and other, NSA, etc. They're paranoid. They're absolutely paranoid. They would love to blow up something. I mean,
and you think that's where we're heading? Somebody's got to blow
yeah,
up
I
something.
mean, I think that, the economics of it will then create the situation to allow it to happen. And that's basically what you're really looking at. You turn the economy down, that's when you have the problem. Americans we're not in favor of going into Syria. They're basically, Americans previously were always isolationists, and they had to convince Americans to get into war. World War II. I mean, there's FDR basically went up to Boston and did a speech, promised there'd be no boots on the ground. Why? Because the Irish basically are looking at it, look, we fled here because of the British. Now you want us to go back and risk our lives to defend the British who persecuted us? You got to be kidding. So most of the people that came to America, they fled from that kind of stuff. They didn't want to go back there to defend them. So basically you had the issue of, Pearl Harbor, and then they turned that into, the reason we have to, get into this war. There were newspaper ads that the Germans took out in New York, warning people not to sail on the Lusitania. Said, please don't get on this ship. They're using it covertly to send arms over. And so they announced it in advance that they would sink this ship. So these things are always the way they go. And government has lied about absolutely every instance to start a war. Never once have they ever been truthful.
And Syria is just in the long line of lies about the chemical weapons attack, you think?
Oh, yeah. I mean, I don't think that, you can trust any of this information that comes out. And I think, honestly, that from what I hear, that the intelligence community is not a big fan of Trump. And neither really is the military per se. Why? Because what did he say during the election? He said he was against going into these foreign areas. Why? He said there would be no more nation building. That's what they do. They go in, they tear down a government to stick pawns in that they want, and then we can control the world. Vassal states is basically what it is. So Trump was basically against military. And, I mean, he was elected effectively by the people. The elites were always trying to go against them. And so you're talking about, term limits, you got Congress against you. You're talking about ending nation building, you have the intelligence community against you, and you have the Pentagon against you. I mean, he has an awful lot of enemies. So I would be, if I were him, I would be very, very, concerned to make sure, because, I mean, he's got to be a prime target for them to assassinate and probably, blame some Mexican for it.
All right, Martin Armstrong. You did not disappoint. I mean, your brain is just whoo. It's a massive computer of facts and figures and things like that. And you don't think things are not going to get better with Donald Trump involved. You don't think he's going to get better. You think the economy is on its way down. Just want to make sure we get that correct. You think the
Yeah, I
economy is
mean,
on its way down. There's no really bringing it back.
no, I mean, I don't think he's going to be able to. You can't reverse the trend, but the U.S. is in far better condition than Europe or Asia. So I think he'll lose on the battle on the dollar, and he's just
Which the dollar's not going to go down. In other words, that's the loss.
yeah. I mean, it's where you're going to put your money. You got major institutional money. I mean, I can tell you what my banking clients in Europe. All right, this is how politicians do not understand what they do. All right, ECB goes negative. We're going to punish banks for not lending out money. Okay, they don't want to lend out the money. So what did they do? They open up branches in the United States, or if they had branches, they ship their money over here to their branch. Then that branch has to be regulated by the Fed, so then they put it into the excess reserves and collect 0.5%. Okay, so I mean, it's not rocket scientists here. It's just that politicians, the problem with them is that most of them are lawyers. They write a law and they think you have to do it. It's not the way it works.
Martin Armstrong, why don't you talk a little bit about your Socrates system that you provide for people? It's a kind of a newsletter. Is that correct? Would you please just give us a brief description of it?
Well, the blog is kind of like trying to keep people up to date on a global perspective, more from a hedge fund manager's idea. You have to really know what's going on everywhere all the time. But the Socrates system is, I grew up in programming. So I had the programming skill and I had the trading skill. So I basically wrote, I was involved in artificial intelligence from the 70s. So I knew that where we were going. And so I basically worked all my life on designing a system that monitors the entire world and it writes the reports. So the Socrates system right now, we have about, it's writing reports daily on over 500 instruments. We'll tell you what the trend is. Okay, where's support, resistance, that sort of thing. Then we'll be releasing the trader version, which will have timing and reversals and specific numbers in it. But I mean, this is a computer that's doing it. Okay, so you don't have to worry about bias or prejudice. That I, maybe went out to dinner and had too many glasses of wine last night, so I did not thinking clearly. All the human frailties of analysis, which is basically eliminated, and that's really where I think the future is, and that's where we have to go. And I think it can be applied in many other areas, in law, medicine, even government. So I think the future from a technological perspective looks very bright. But you have to also keep in mind what's happening is this is like the invention of the combustion engine. Once that happened, you then develop tractors, etc. I mean, agriculture used to account for 70% of the workforce in the 1850s. All right, it's now down to 1%. So people are getting replaced by robots, etc. Democrats are, we're pushing for the, minimum wage to go up. Minimum wage is basically for teenagers. All right, very few people really support a family on that. If you have any kind of skills, you're always paying more for that for somebody for various different things. But if you double the minimum wage, what do? You're now taking the real low-end service jobs you can replace them like you're seeing in Wawas and I mean the biggest thing is Frankfurt Airport in Germany. You walk in, there's absolutely nobody there whatsoever. All right. You go in, you get your ticket, comes out of the machine, you put your bag down, it weighs it, out comes the ticket, you put it on your own bag and off it goes. All right, that's it. There's nobody even there at a counter. Um, so you're going to see much more, still this deflationary atmosphere, and that will also lead to more civil unrest. But um, the low end jobs are being replaced by robots, and it's we're driving it because of taxation. Um, Obamacare, is I mean the biggest joke I've ever seen. They said, oh, and what are the Democrats saying? Oh, well, if Trump revises that, seniors are going to have to pay more. I paid double what I did when Obamacare came out. And I have two cards, one for children I don't have, Blue Cross and Blue Shield. When I got the cards, I called them on the phone. I said, you sent me a card for my children. I don't have children, okay? And they said, oh, you're not paying anything more, but you have to have it by law.
It's
So, I
unbelievable.
mean, the joke is you can just go down to an inner city and say, hey, I'll adopt 1,000 people. Don't worry about it. You're all covered.
Well, and so your Socrates section, just want to get that is something that you put out on your website for hire. I mean, for pay. It's a subscription. It's a paid subscription, correct?
Yeah, you can. We have like the first level that's out is for the average person.
Okay.
All right. And we're trying to keep the price down for them. It's like $14.95 or 99 a month, like subscribing to Netflix, basically. So then you can call up different stocks, take show you a chart, whatever, tell you, and it writes all the report out. Are you an uptrend, downtrend? When were you looking for turning points? It will give you a nice longer term overview.
Okay. Martin Armstrong, thanks. I hope you come back soon. Thanks for coming on and giving us your world big picture view of everything going on, everything from the war cycle, which is heating up, to the economy, which is going down, and even you give us some words on gold, which is basically a hedge against government. Martin Armstrong of Armstrong-Economics.com. Martin Armstrong, thanks for joining us today on USA Watchdog.com.
Well, thank you for inviting me.